where the ongoing construction of the standard gauge railway in Naivasha was temporarily paralyzed after workers downed their working tools over lack of protective gears. The over 200 workers from sections DK86 and DK87 in satellite Mai Mahiu were demanding gumboots and waterproof jackets due to the heavy rains that have been pounding the area. This came as it emerged that the ongoing works had been affected by the heavy rains, which had rendered feeder roads to the various sections impassable. Some sections along the railway line have also flooded adversely, hampering the extension of the railway line from Nairobi to Olkaria, Naivasha. According to one of the workers who declined to be named for fear of being sacked, the Chinese communications construction company had failed to provide them with the gumboots. The workers said that as a result, they were being forced to access the flooded area using the normal boots, noting that they exposed them to foot diseases. Well, e-health platform Mai and Sanlam General Insurance have announced a partnership aimed at curbing insurance fraud and improve access to genuine and affordable drugs. The move is expected to be highly beneficial to the insurer, as it will lead to significant savings as the Mai e-health solution removes fraudulent and illegitimate claims, which have been an issue for the health insurance industry and contributing to the losses to date. This will create an opportunity for growth that will facilitate for both higher profitability and stronger customer relations. Customers can also purchase genuine, reliable drugs via the portal. Taxify, Europe's and Africa's fastest-growing ride-sharing platform, launches its Taxify Go and Taxify XL features on the app today in Nairobi here in Kenya. Taxify Go is Taxify's economy category with more affordable fares. The fleet consists of smaller four-seater cars with 1,300cc engines suitable for everyday commuting. Taxify XL is a tailor-made category for larger groups with a seating capacity of 6 passengers. The move brings to the additional vehicle types on board as new application features arises from a need to cater for a more diverse customer base, which now includes groups who wish to use the larger capacity vehicles such as vans and multi-purpose vehicles. In addition, based on feedback from customers, Taxify has decided to refine its service to include vehicles with smaller engines that consume less fuel, resulting in lower operational costs to drivers and therefore more affordable fares for riders. Australian mining multinational Base Titanium has reported a slowdown in sales and production in the first quarter of 2018 from its Kwale operations. The firm in its quarterly operations update saw a decline in tonnage as compared to the previous quarter in the mining of mineral sands that include ilmenite, rutile and zircon. Tonnage reduced by 7,579 and for rutile, which also was quite one of the issues that did emerge from the report. Rutile and zircon from the report for December last year, respectively. The company attributed part of the slowdown to an extended planned maintenance shutdown of 4.5 days to refurbish a number of major components in its minerals separation plant. The firm is, however, going full steam ahead to wholly optimize its Kwale Phase 2 project, with construction completion scheduled for the second half of 2019. Well, police in Kilifi County have been accused of harassing Mnazi sellers in the area. Led by Malindi Member of Parliament Aisha Jumwa, she says that it's unfortunate that the women who depend on Mnazi for their livelihoods are being frustrated by the police, starting from Ganze, Rabai, Mtwapa and Kilifi South sub-counties, denying them their commercial rights. Well, Jumwa says that the education of many children from the poor communities has been funded by returns and by the sellers, and area leaders have petitioned the county commissioner to intervene and stop rogue officers who are harassing Mnazi sellers and robbing them of their income. Despite the women complying with sales regulations, which states that the time limits of selling Mnazi start from 5 to 11 p.m. Nakada Coast Regional Manager George Karisa says though Mnazi is not among the banned substances, it's Nakada's county government role to regulate.
Mimi nafikiri ni vyema tuje tukae tufanye mikutano kama vile sisi tulivyofanya Malindi na kila mahali kuwe na amani.
Si haramu, lakini ni kwamba lazima utumike na uuzwe kulingana na sheria ile ambayo iko pale. Kwa hivyo
well, very unfortunate development there for the Mnazi sellers. Well, let's take you now to London, where President Uhuru Kenyatta has broke his silence over the rate cap, saying that the government will be reviewing the law to boost credit uptake. The president further reaffirmed that his administration was committed towards availing cheap credit to Kenyans to foster economic growth. The president was speaking at Chatham House in the United Kingdom. Here's more on that.
We have our financial regulators, the central bank and others, who are equally quite concerned about, which is not just, it's not peculiar to Kenya. I think financial regulators across the globe are concerned about the impact of blockchain and whether it can be regulated and what impact can it have on the overall financial markets and the money markets, and are we able to regulate it in a manner that is also not going to be used as a medium for illicit cash transfer.
Well, quite a major development there on matters to do with interest rates and, of course, blockchain technology. The president talking off from that particular visit where he is in London to try and make some bilateral ties and strike some business for Kenya as well. We shall definitely be updating you as and when we receive more updates from London. Well, let's still stay with matters finance, and the World Bank now wants savings and credit cooperative societies, that is SACCOs, to operate as banks so as to help lower the cost of credit in Kenya. The Bretton Woods Institution has released a study sanctioned by the Central Bank of Kenya outlining a set of reforms that should be introduced to replace the low capping interest rates. Part of the proposals is allowing SACCOs to access more deposits via formal payment systems to allow them to offer higher facilities, which, while increasing competition for banks. Currently, SACCOs tend to lend at rates below those of the market, which are about 12%, but the majority and often sole source of their funding is members' deposits. They are therefore highly constrained in terms of amount and maturity of the loans they can provide.